What is the 10% penalty for early withdrawal from a traditional IRA? Have you ever thought about what happens if you need to take money out of your traditional individual retirement account before you reach retirement age? Understanding the penalties can help you make better financial choices. When it comes to traditional individual retirement accounts, the Internal Revenue Service imposes a 10% penalty on withdrawals made before you turn 59.5 years old. This penalty is in addition to any income taxes you will owe on the amount you withdraw. The 10% penalty is meant to discourage people from taking money out of their retirement accounts too early. After all, these funds are intended to support you during your retirement years. However, there are specific situations where you can avoid this penalty. For instance, if you are a first-time homebuyer, you can withdraw up to $10,000 without facing the penalty. Just remember that you must use these funds within 120 days of the withdrawal. If you are planning for education expenses, you can also withdraw money for qualified education costs like tuition, fees, and books without incurring the penalty. In cases of disability, terminal illness, or death, you or your beneficiaries can withdraw funds without facing this penalty. If you are welcoming a new child through birth or adoption, you can take out up to $5,000 for related expenses without penalty. If your medical expenses exceed 7.5% of your adjusted gross income, you can withdraw funds to cover the amount above this threshold without penalty. Additionally, if you have been unemployed for at least 12 weeks, you can use your individual retirement account funds to pay for health insurance premiums without incurring the penalty. Members of the National Guard or reservists who have been called to active duty for at least 180 days can also make penalty-free withdrawals. Another option is the Rule 72T, which allows you to take equal periodic payments over at least 5 years without penalty. However, once you start this schedule, you must stick to it. For banks and credit unions, it is essential to educate clients about these rules and exceptions. By understanding the penalties and exceptions surrounding early withdrawals from a traditional individual retirement account, clients can make informed decisions about their financial futures. Financial institutions can provide guidance on managing retirement accounts, helping clients avoid unnecessary penalties and maximize their retirement savings.